Welcome back to the channel, Market Hawks. Hit the like button and subscribe. This is where you get your financial gain so they won't run a financial train on you. There's so much stuff took place over last week. We had tariffs. Today we have the CPI, Consumer Price Index. What does that mean? That means that your buying power has become less. The same amount that you spent last week or the previous week before on, say, groceries. If you spent, for example, $200, this week it might be $220. So you have less buying power to be able to go and buy the goods and the things that you normally buy at the same price. So what happens with the consumer price index, it shows you the sentiment of the consumer. And when the consumer sentiment is not happy because they have less disposable income, that allows them to spend less money. When they begin to spend less money, let's take that and correlate that into investments in stocks. That means that the corporation has a chance of making less profits. They might not be as profitable as they were last quarter. So if they're less profitable, that means that investors are less likely to buy that stock. Now that's how you put that together. Consumer price index, less money, less buying power. It makes the sentiment bad of the consumer. They have less capital on their hand to be able to spend. Well, let's not say capital, let's say income. And they are less likely to spend. It correlates possibly to the corporation where they make less profits. And when they make less profits, they're more than likely to make investors happy to buy their stock. And investors are less likely to buy their stock. So today the CPI came out and it was worse than expected. Now I always tell you when you come here, this is not financial advice. This is information that could possibly change your life. Now today, what we're going to talk about the different kinds of stocks. We're going to get into, first and foremost, common stocks. What are common stocks? Common stocks give you voting rights. Your voting rights allows you to participate in the activity of picking the board of directors. If this company is going to make an acquisition and merger, in other words, buy out a company. And common stock is per equity. You have the chance to allow it to appreciate. That's what you're looking for. Then you have number two, preferred stock. What are preferred stock? Preferred stocks are more like a convertible bond. Investors generally buy preferred stock because they're looking for more dividend activity. They're looking for a little more safety in the fact that they're looking for that unearned income, meaning that a preferred stock is like a hybrid. It's like a common stock and a preferred stock. They're a little different. Don't get it mixed up because we talked about common, but we're talking about preferred. Preferred is like a convertible bond. It's a stock slash bond, meaning that if the company was to go bankrupt, the preferred is kind of like a bond that they would get their they would not profits, they would get their capital back first. So usually when you have a large amount of capital and you want to play it safe, you tend to play more to the preferred stock. So we covered common stock. Now we could just cover preferred stock. Now we have value companies. What are value companies? Value companies are companies that have already matured. They've hit their peaks and they make a certain amount of money and they produce a certain amount of money. So there are companies that if the stock was normally, let's say, $80, at this time you might see a value company at 65. So meaning that the stock is below the actual value of the price. And this company is already matured. They've already hit their numbers and they do a certain amount of numbers and they pretty much are at a certain standard. That's what a value company is. Then we have growth companies. What are growth companies? Growth companies are companies that make exponential growth. You cannot judge it. It's still young. You don't know how far it's going to go, how long it's going to grow. That's what growth companies are. You generally need growth companies to build your wealth, but value companies are just as valuable because they're more stable when markets pretty much get very volatile. And I always tell y'all, let's Stay economically woke. While everyone spend money on stuff that don't matter, we play broke. Why? Because that is the investing rules of changing our behavior and start to think about common stock, think about preferred stock, think about growth companies, think about value companies, because all of this stuff affect us every day.
Bit of a clinic there on Trump 101. And let's take a step back and think about what that 101 is. We've talked about it repeatedly over the last few months. If you export into America, life might become difficult. If you're invested in America, this administration, its objective is to make life as easy as it possibly can for you. Now, maybe you disagree with that. That's your judgment call. But ultimately, what you're hearing there from Erin, that's why she's getting long to domestically expose big names on a stock market.
Investing should become a part of your daily habits. We have a lot going on in the economy, and a lot of people don't accept it. But under this administration, I want you to take your feelings and put it to the side and understand what's going on, because a lot of people don't like what they see. And what we do, we tend to make decisions from an economically immature aspect. Our job now is to focus on investing and grow into economic maturity, where we make decisions as if a businessman or a businesswoman. So no matter whether you're black, red, or white, or we all want to see some more green. That's how this works. So the color is green, and that's what we're going to focus on at this point in time. This administration, the people that work every day and work for their income, you're going to see the worker. The worker is going to be hit by higher tax rates, while investors and business owners get lower tax breaks. That's where we're going. Your life will become easier the more that you put your time into investing. That's what the country's built on, and that's what this administration is pushing. So you should be geared towards investing your money. Why? Because wealth is made in your sleep and not on your feet. And I want all of y'all to understand that. Hit the like button and subscribe, and pay attention and keep your economically mind woke so we can see opportunity in the markets.